But then you have a quiz that makes you talk about this idea of a stock split, which is different from a stock dividend. Okay, it's similar but different. All right, when I have a stock split, what the company does is instead of formally, sending out a dividend, they just make an announcement that we are splitting the stock. Meaning if you're holding one share of stock and we do a 2-for-1 stock split, it means that each shareholder that holds one share now has two. So this is the right answer in that quiz question. This is what it means. It means the company is going to split the existing stock so that each shareholder number of shares will double. It's just accomplished by this announcement, if you will. They don't actually ship out a new share. Well, eventually you'd have a new share. In the olden days, you'd have to have another share, so you'd have another piece of paper. Okay, so what does a 2-for-1 stock split do to the share price immediately upon the split? So, in theory, what it should do, a 2-for-1 stock split, it should cut the price per share in half because you have the same economic value of the company. You just have twice as many shares to spread it to. So that should make the price be cut in half. And then there's a thing called a reverse stock split. And what would that do? That means everybody that is holding one share now only has half a share. No, it's completely the opposite. The share price should double when we do a reverse split, okay? Because we've shrunk the supply of shares, if you will. It's the same economic value, but now there's only half as many shares. So each share should jump up in price. All right, so from an accounting standpoint, if I've just made an announcement that the stock is going to split, I haven't really done anything that's going to bring additional resources in or take additional resources out. So in this particular example I'm giving you is not being affected through a dividend. I say that because your book gives an example of a stock split, but they say it is being affected through a large stock dividend. Okay, so in this we had a little bit, I think I did a little chart like this in class, whoops, where I had before and after. And then I just had all my questions, the par value, common stock, the paid-in capital, excess account, the number of shares. Oh man, a very short one. Oh no, that's all I needed. All right, and so the before, this is easy, I can fill in. There was $1 par value. The common stock balance, $1 par, that means the common stock balance was $3,000 because you continue to remember that that is just par value times the number of shares. The paid-in capital excess, well, how do I know what that is? Well, if they were issued originally for $10 a share and there's a $1 par, that means $9 of every 10 went to paid-in capital excess. So 9 times 3,000 gives me 27,000 here. This is what's in my general ledger, and the number of shares before the split was 3,000. So it's a 2-for-1 stock split. So let's start with the easy. 2-for-1 stock split means that after we make that stock split, we have 6,000 shares. Okay, so we just split it in two. All right, so what's the par value? Well, what happens with a stock split is if we double the shares, we cut the par value in half. If we tripled the shares, we cut the par value by thirds. Okay, so we still end up with $1 times 3,000 is $3,000 in common stock. Now 50 cents times 6,000, so we still have 3,000 in common stock. Okay, important thing to note. That did not change. Our common stock balance didn't change here. Whoops. Sloppy writing. Our paid-in capital didn't change either. Okay, so looking at this, you get to the question to record any journal entry. Well, if my common stock and paid-in capital accounts stay the same before and after, there's not really any journal entry to do. Okay, so there's not any entry. What would be different if this had been affected as a large stock dividend? Meaning if the company, instead of saying it was not, said, oh, we're going to do a stock split and we're going to affect it through a large stock dividend, that basically means that they're doing a large stock dividend. So from our last example, you know that that would mean that we would do an entry just like we did in Activity 3, where we would say, oh, it's 3,000 shares at $1 par. So we would do an entry to debit retained earnings and credit common stock. Okay, that's if it had been affected through a journal entry. I'm going to just say Activity 3 previous to this one. In case you're thinking, wait, we've only done 2. Yeah, okay. All right, so then there's a quiz about verifying your number. And then we're going to change to a new topic.